the central banks signal through their statements what the market needs to hear, not necessarily what they're going to do. Hey everyone, thanks for joining for another episode. Today we are going to have another little bit of look at the markets and see where things are going. Obviously, in the last week we've had a few more hacks again, which is not great for the industry from a new retail perspective. It certainly always puts the fear in the market. But we're going to have a look at just how has this hack affected the markets with the Nomad hack, the bridge hack, which is quite large, and then we've recently just had the Solana exploit, they're calling it, not a hack per se. So let's jump in and have a look at some charts just to get going here. Not that one, let's start there. So, the hacks this last week, I kind of think it's been fairly blippy in the market. I don't think Bitcoin or Ethereum have really cared that much at all. They're still going off the news from the Federal Reserve of slightly less predicted interest rate hikes. So, from my perspective here, the market didn't care. Let's look at Solana, especially Solana just yesterday with all that fear that the entire thing was down. Look, Solana has barely moved at all. You can see in the graph there, like it's shrugged off entirely. So I think what I'm taking from that is that at the moment the market doesn't care about this kind of small noise now. But I think we've had such huge big noise of late that everybody who was shaken out has been shaken out. So these are terrible things, and people have lost money, and it really sucks. Sucks for the space. But I think the overall market doesn't care anymore. The overall market, everyone's sold, everyone's past that point of thinking that we can go lower, and that's why I had that fear and greed index up there before. We're at a 30 here, whereas we got to extreme lows in like 6, I think, was when 3 Arrows Capital and Celsius went down. So the hacks this week, the market didn't care. The market's still going off that little bit of a high from the Federal Reserve, I think. So this was a bit of a blip on the radar, I think, in the grand scheme of things. I think potentially it was just the markets accept this risk, and everybody who's in this space now has accepted this risk that hacks can occur, and it sucks. Goes back to the old thing, make sure you're using a hardware wallet to keep your funds safe. I'm sure everyone's saying that right now. But what I want to talk about now is, I guess, we need to accept that the crypto market and the macro market are fairly well entwined. And let's have a look at the examples of what the Reserve banks do. So the Federal Reserve, and I'm going to look at the Australian Reserve Bank as well, because I think, we can see a lot of indications from them and what they're signaling and how that affects the market. Because people have a lot of conspiracy theories around, central banks, and that, they're either completely at a loss of what to do or they're really smart guys. I tend to think that these guys are probably more on the edge of the smart guys, and they know how much power there is in the signaling that they give the market. So if we go back in time here to, when was this dated? June 17th, 2021. So back then, this is a year ago basically, the Federal Reserve was saying that they would raise rates by late 2023. And this is above their previous estimate, that they previously estimated no rate hikes would occur for 2024. So this is just 1 year ago. They were saying that no interest rate hikes till 2024. And then just more recently, then in May, they changed, saying no, this twice. But what have they actually done? They've increased the interest rates 4 times already in 2022. So are they idiots? Do they not know? Could they not forecast out a year? Maybe. Let's have a look at what the RBA said. So the RBA, this is back on 6th of July 2021, so pretty much a year ago. RBA maintains 2024 deadline for interest rate hikes. So they were saying back then that they would not raise interest rates for 2024. Well, here we are in 2022, and they have raised interest rates 4 times. So again, a year ago they said not till 2024, and now it's 4 months in a row. So the question's got to be asked: are these guys crap at what they do, or are they signaling to the market what they think needs to be signaled? I think they signal what the market needs to hear to maintain stability. Because, I mean, it'd be crazy to see what would happen if the Federal Reserve, for instance, came out and said that they are, aggressive, going to cut rates for an entire year kind of thing, or raise rates for an entire year. That much signaling to the market always move the markets. We saw last week how much the market moved just on them on a slightly less predicted interest rate hike. So they are signaling to the market what they want the market to feel, how they want the market to move. And so let's go to now, based on the fact that what we think they're saying is what the market needs to hear, not necessarily what they're going to do. Let's have a look at what they're saying now. So, Federal Reserve, August 4th, 2022, so just recently, very unlikely Fed to cut rates next year. So they are very, very strongly signaling, telling people that they are not going to be cutting rates next year. That's the Federal Reserve came out and said that. One of the Minneapolis Federal Reserve president came out and said that they are not going to cut interest rates next year. Only a year ago, they said no rate hikes for 2024. Now they're saying unlikely rate cuts. So I believe they're saying these statements now because it's what the stability of the market needs. The market wants to know that the Federal Reserve is in control. They've got the economy under wraps. They've got inflation under wraps, and they're managing the problem. So they signal these very strong things to the market, but in reality, what's actually occurring is they're going to do the opposite. So I wouldn't be surprised to see rate cuts early next year. What did the RBA say? I couldn't find something quite as strong by the RBA. So a statement from August from the RBA. They're down here saying that the size and timing of future interest rate increases will be guided by the incoming data. So they're signaling that they're still going to be doing some interest rate rises. I couldn't find them coming out being quite as aggressive in their signaling as the Federal Reserve. And let's have a quick look at the fund rates. So here we see this is the 4 rate hikes in the US. I mean, again, if you go back in time, they actually come up very aggressively for interest rates for the last 10 years. But if you still look at it over long term, significantly down from then. Let's have a look at the Australian one. So the Australian one goes back even longer than that. And you can see it's continual downward trend to there. In the last 4 things we've had increases. So what's the take from this, I guess? I think the main thing to think of is that the central banks signal through their statements what the market needs to hear, not necessarily what they're going to do. They know that they can move markets based off what they say, therefore read between the lines of what they're signaling, because that is where you can get information about where things are really going. Well, that's it, guys. I hope you enjoyed that one.